The Indian CV space has been a laggard within the overall sluggish automotive industry performance post FY19. We saw many factors were into play for this. The BS6 transition that happened, GST got implemented and many others, and then comes COVID. The industry was shattered, but after the first wave of COVID, we see that the international markets picking up, and following to that, the domestic market pickup and recovery was quite healthy. In this space, the one company that has been doing really well, not only operationally but also in terms of rewarding shareholders, where we see that the stock of the company is up 257% in just 1 year. The company in focus is MM Forgings. In Q4FY21, the company reported Dhamaka Earnings. The revenues were up 76%. EBITDA was up from 24 crores last year to 59.5 crores this time. The margins show a tremendous growth at 20.3% in margins this time, and profits of the companies were up 11 times. After this, the stock has been in momentum and also in the focus. And to talk more on what is the future outlook of the company, where the company is seeing growth prospects, what is their growth outlook in the domestic and the international markets, we were joined by the Vice Chairman and Managing Director of the company, Vijay Shankar Krishnan. In this exclusive interview to ET Now, I am here to share the highlights of this interview. Starting with the growth outlook in the domestic market, Mr. Krishnan says that in the last 2 years, the industry saw a very sluggish demand. In FY21, the first half of this year was hit badly by the COVID, but as of now, he feels that the excess supply has been wiped with the demand in the system. The CV market is poised for real growth in the times ahead, and growth in the GDP numbers will aid the growth in the domestic market. On the outlook in the international market, he holds a very positive stance. The CV market in the US surprised in the month of June 2020, wherein the industry saw healthy order book building up for the Class 5 and Class 8 truck orders. The truck market in the US has been doing really well, and he expects it to continue this growth for the next 12 to 18 months, and maybe until the end of FY23, this kind of growth could be seen in those markets. The European markets as well has been holding very strong, and with respect to how the international markets are performing, the Indian market as of now is lagging behind the international market growth and should catch up now going ahead. Now, as highlighted, the margins of the company were exceptionally well, with 20%, more than 20% of margins this time. When we asked him that how sustainable are these margins, then the management is of the view that this time actually these margins were due to the overall better sales clocked in by the company and the reasonable cost control initiatives taken by the company. Because we are experiencing commodity price inflation, we are amidst that commodity inflation cycle, which might impact the margins of the company, but management has been taking price hike, and not only that, the company has been passing that to its customer. So commodity inflation is not impacting the margins of the company as of now. On the growth outlook ahead, the company informed that since FY16, the company has invested around 750 crores overall, and they are still in the last leg of their CAPEX cycle. Going ahead, they will add more, but as of now, in the current capacity, the last year their production was of 47,000 tons. And this year they are targeting a production in the range of around 60 to 65,000 tons. And not only that, for going ahead, FY23 and FY24, they are targeting their production to cross 1 lakh ton mark. So that's the target they are setting. This year they are also improving their capacity from 1 lakh of ton to 1.2 lakh of ton. Now, when we see in the automotive industry, many companies are actually seeing the EV cycle transformation happening. Many companies are moving towards that, where the MM Forging is standing right now. Then the company is of the view that the EV market in the CV space needs to evolve more. He expects that the market for the next 10 to 15 years to be in the current state of technology, with only a small portion of the industry making a shift towards that. Whereas on the other hand, he feels that the hydrogen as a fuel has been very strong in India, and the Indian context, he feels that India is in the position to generate green hydrogen, which they feel will be the fuel of the future. So that's the outlook of the company on the EV transformation happening. They don't have any plans, but they are quite optimistic on hydrogen as a fuel. So overall, the company has been doing really well. The stock is holding up, and also in the today's trade, just after the interview, the stock was in momentum and is up around 3 to 4% in today's trade as of now.